Yeah, hi guys. Quick look at the markets, see what we're doing here. Sorry it's been a while. Went camping. I needed to get out in the woods, spend some time swimming in the lake, campfires, um, drinking water out of the river, and fishing and cycling. Um, Got to stay. These things will keep you healthy away since we find ourselves in this rigged digital dictatorship, um, rigged reality. So, in order to focus, we have to spend as much time in the nature as possible, um, because this is not a real reality. So, this stuff here is tomorrow, dollar. Today we got a little bit. And US on Friday again. This guy here, our friend, is calling for, keeps mentioning this word here. Now, if we go back to the last time this happened in back in 2007, 8, that's what we were told, and that's what everyone kept speaking about. But we got to remember this guy is always going to get us going with the mainstream, which is the opposite, the wrong place. So most likely there's not going to be a recession risk. We're starting to see things like this happening in the news, of a possible shift in time paradigms. Um, Whether or not we will go into this Agenda 2030 is going to be determined this year. We're going to find out this year. Essentially, if this recession happens, then that's what we're going to do. If it doesn't, then there's going to be a turn, and it will be a surprise shift in the economies, and everybody will think that they're rising. And if you look outside, they appear to be. Everyone's pretty busy, but I am seeing more tents cropping up. Um, so, but when we go back to 2007, nothing really happened. The pubs were still full. There was brand new cars still being bought, driving around. The realtors were still busy. Um, Grocery stores were still full, um, and people were still going on vacation. Planes were still in the sky. So essentially, there was no recession. It's all nonsense. It's just to get us distracted. They want us distracted in these lower fractal areas of this fake reality that's not even real. So that's that. Um, Risk of technical break. What's he talking about? All right, so what he means is up. Risk of technical break. Why would he say a risk? So obviously, why would he say a risk? So he's bearish. So he's bearish, and he's trying to get people to what, jump out of this sell or something like that. I don't know what he's doing. We'll find out as we go on. He might just be confusing you. This could all be just a confusion. But I don't believe that this is actually going to happen based on a few things I'm seeing at the moment. Anyway, enough of that. We're short pound Swiss and we're short Euro Aussie. These are pretty easy. Were pretty easy trades. I'll try to break down why we did them. A little bit crunched up here. Sorry. All right. So I'll try to explain something about they're always saying look to the left, right? And all that means is actually look to the left. It doesn't mean zoom in on all of these things here, these past areas and support and resistance. They really mean look to the left as a whole. Um, so if we do that from this point, which was last night in euro, okay, I'll just draw this line here, and pound is here. We'll bring the Swiss over and we'll bring the Aussie over also. And we want to look at it on the same fractal because we can do this on a 1 minute chart zoomed in. Okay, if you just look at this, you can figure it out. But then on that 1 minute chart, you'd want to look to the left further and try to get the theme. And if you were to do that, you'd see it's up. And at this point, euro would be down, right? Even if you go back here, you see euro still, yeah, it's up, but overall it's down. Here, Swiss is clearly a stronger currency. Obviously, pound is the same on a weaker perspective. Aussie looks like this. And we can do this on any, we can go to this fractal, right, and do the same again. And we'd see that Swiss is the long and Aussie is the short. Okay. But relative to euro, come back here. Aussie is strong and euro is weak. And if we zoom out, we'll just look at it on a 4-hour time frame. Make it easier. That 4-hour picture is about all of those 1 minute, that 1 hour chart zoomed out, right? So we see here that euro is weaker than Aussie, right? What I did to find this out last night, firstly, was I went on to the 1 minute chart. So I already had this in mind, but I wanted to see on a local perspective what's going to happen, because we don't want to sit through 2 days of drawdown. Why is this not zooming out? This one here. Are we at the maximum here? Maybe. All right, so we'll come back here. It was last night. It was like New York. Like New York's about here. New York closed like lunchtime. So we'll take this area here, and that's all we know, right? This view here, right? Okay. And we can see that euro here is stronger. It's up. And Aussie is down but up. So what it's telling us there is we have to look to the left further, because we don't know the answer here. So that's why we were looking on that 1 hour time frame. But if we do zoom in here, we see that Aussie is higher, is up here. And at that point, euro had a drop, a big drop. So this would tell me that euro is weaker than Aussie on a local perspective. Okay, so I hope that makes sense. Um, then, I mean, if you just saw the euro Aussie, you never would have known this. You just would have seen the move from the averages, so you know that why it's down, why it's below the averages. The question is, are these going to work and cross and all that stuff, and how are they going to do it? Well, in New York, you know that it's going to take time. That's going to have to cross. This is going to have to turn. It's all going to have to hit there again, and it's going to have to bounce and all that stuff. Look, see, now it's going to have to cross. So you know you've got quite a considerable amount of time to wait, and that's why you shouldn't get chopped up in New York. New York close is just it's an accumulation area. It's a time to figure out what the trade's going to be for London, really. And then, boom, as time goes on, these averages start to look better, bearish, whatever you want to call it. And then at the same time, we see it with the Euro index. And in doing so, that strength, that weakness in Euro allows the Aussie to have a little bit of strength. So you can see it's held. So the question is Aussie going to go up further? Well, we'll have to come back and find out. But I suppose at this point, we'll look at this in New York close or Asia. But the question is this going to continue? Or not? Well, my guess is yes, because if we look at our 4-hour perspective, I can't for some reason zoom out on this chart now, so we'll have to just go like this. Sorry. All right, let's go back to here, that day there, which we all know about. Here. All right. So yeah, I mean, we know that here it's weaker. Euro is weaker. If you look to the left, all the way along, Euro is weaker than Aussie. So we are on the right side. Um, the question is, are we going to go lower on Euro here? What are we going to do? Are we just going to hold it here? Well, we're going to wait, right? We're going to sit with this in this direction until the higher time frame changes the perspective, and we'll see that happen as it happens. So for now, we'll just wait. But what we have in this section here is a weak euro, a relatively strong Aussie. If we look at this section here, we've got a sideways Aussie to weak, but looking from here, it goes up, and this is down. So we continue to hold. That's that until this changes. Let's look at pound Swiss again. We will take a couple of these off though. Um, where has the Swiss gone? It's here. All right, same deal here. Like I said, we'll just zoom out right from the back here. Up, sideways, weekly, down. As far as we can see, we know all it says is down, and here all we know is up. So we're going in the direction of the overall model anyway, and we're most likely going to take this high out. During the fake recession, if there is a fake recession or not. Now, so we know that this is strong, we know that pound is weak, we know during this area here, pound is sideways. Swiss is sideways, and pound is down to sideways, which means continue to hold. Okay, that to that is weaker than that to that. Okay, and if we go from that to that, this is stronger than that to that. If we go even further, boom, boom, you see. So that's why now we look to the left through here to try to gauge what's going on. Anyway, I think that makes sense. Hopefully, what's the dollar index doing? It's as we discussed, we were going to come off this high, come down, go sideways. Then option one was up, then down, or I think option one was sideways to up and down, or option two was up, down. Then there was just a straight up move, which never happened. So I think we're going to take this out finally, this one, and then if we do that, then we're going to look to buy this again. If we look at dollar from a perspective collectively against the other charts, is it weaker is the question currently to allow it to come further down to take this out. Let's find out. There to there, pound is strong. We're not going to go from there because we can't see the level, because there's some sort of bug going on back here. So we'll go here to here, dollar is up, then down. So overall it's down. Here to here, pound is down. Zoom out a bit. Dollar is up. Okay, and we have to go through all the different currencies, and that's going to tell us the weight of what this is going to tell us anyway. So our eyes overall, once we take that out, that level out, we are going to go and take this high out again. That is the plan. So into here a little bit further and then up. Yeah, that's the video, guys. I will update you a little later.